everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are several things to pay attention to for the upcoming trading week. Now, last week was a deluge of information. We had so many different pieces. We had CPI, PPI, retail sales. You had 4 central bank announcements. You had all the service and manufacturing data. It was the mother lode last week. And all of a sudden, as we get ready for the holiday season and Christmas to begin, we get much more quiet. This week is very quiet. I'm going to start things off with our earnings calendar because, well, that's what we've got cooking. And there is just a smattering of earnings, a couple big names you might recognize, but I'll start there. 293 companies reporting this week. Monday, you've got a big fat goose egg. On Tuesday, you've got Accenture, BHP, so you natural resource fans out there, and you have FedEx. On Wednesday, you've got Micron Technologies and General Mills. Let's see if they benefit on their earnings from decreased commodity prices. And on Thursday, you've got Nike and Cintas, as well as Carnival Cruise Line. So that is your earnings calendar. Nothing there that is an A-lister or a major market mover with regards to the overall indexes, but in your portfolio, they may be there, so be careful trading those symbols. All right. We had the central banks from around the world. You had Swiss National Bank, you had the Bank of England, you had the ECB, all coming out with announcements last week, staying right where they were at. And you had the U.S. Federal Reserve making their announcement and also staying right where they are at. This week, we have one announcement coming out from a central bank perspective, which may be of interest to you, particularly if you're trading the Japanese yen. And that, my friends, is the Bank of Japan making their announcement. They're expected to stay right where they're at negative 0.1. Now, keep in mind, they've been at negative 0.1 for the longest time. I think what's going to be telling here is in the next, maybe this meeting or the next few meetings, more discussion about them actually starting to get back into positive territory and raising those rates. So that could have a pretty big move or impact on the Japanese yen, which of course has been dropping and dropping and dropping and dropping and it's getting weaker and weaker and weaker, which is great for those of you who want to travel to Japan as things are getting cheaper and cheaper and cheaper. All right, let's keep on moving with the big economic data. We heard Jerome Powell at the FOMC meeting and the press conference on Wednesday talking about how GDP is starting to slow down a little bit. Well, I don't know. We'll take a look at the economic data there to see if that is in fact happening. Here's a chart of what GDP looks like. And if you take a peek at GDP, you can see that for the past 4 quarters, it has been trending down, although still above zero. Now, the annualized GDP rate is 5.2%. That's where we currently stand. And expectations are we're going to come out right at that number, meaning an annualized rate of 5.2%. Now, any deviation from that number could have significant waves for the market that morning. Keep in mind, this is going to happen at 8:30 a.m. Eastern time. That's going to be 1 hour before the equity markets open. So that news will be built into your Thursday trading session before it even starts. All right, our final piece, probably the most important one. Last week, we had Consumer Price Index on Tuesday. That was looking pretty good. You had PPI Index on Wednesday, also looking pretty good. This is the one that the Fed is eyeballing, though, which is the Core PCE Price Index. And as you can see here, we have seen those numbers decline over the past few months. This Friday at 8:30 a.m. Eastern Time, again, 1 hour before the markets open, you are going to get the next reading of Core PCE Price Index, and expectations are, drum roll please, there it is, 0.2%. Now, this number is important because 0.2%, that's just 1 month's reading. As you can see by that chart, going back into January, we were like 0.6. We had other months where we were 0.4, 0.3, 0.2, 0.1. Averaging those and taking the last 12, adding them together and dividing by 12 gives you, or adding them together, gives you your annualized rate for inflation. Now, if we keep that 0.2%, that means that we were going to have a 2.4% inflation rate. Now, we have to have 12 in a row at 0.2. Point is, it's rather low. And keeping that inflation number low for Core PCE Price Index is certainly something that the Federal Reserve and Jerome Powell are keeping an eye on. If it starts to surge up, of course, that means they may need to be more aggressive with rates. If it stays where it's at and drops even lower, that means they may be able to put the pedal to the metal a little bit, start cutting rates, and that could stimulate the economy even more. Of course, here we are at a moment when we have markets tipping through all-time highs. We've got the inverted yield curve, which has been inverted for over a year and a half. So there's still a lot of uncertainty going forward. The good news is lots of action, lots of volatility because of these inflation numbers, the FOMC announcements, GDP, and much, much more. That, my friends, is your Monday Morning Must Knows. We'll see you next week.